With that preliminaries, let me thank our technical guests and invite our market master for the morning, Dipen Sheth, Head of Equity and Strategic Marketing, HDFC Securities. Good morning, Dipen. Thank you very much indeed for joining us. Are you going to buy ahead of the RBI governor speaking?
Yeah, Lata. Thanks for inviting me to the show. Look, I think there is something much bigger than RBI, much bigger than stock markets, much bigger than macros. Right now, I think the human survival issue that we are confronted with is far more important than what is happening to macros and markets. Yes, of course, we are creatures of the stock market, so we will have a worm's eye view of the universe. But frankly, the worry on my head right now is the pandemic, which is exponentially rising every day. It took 44 days for the first lakh people to get infected, then 12 for the next lakh, 4 for the next, and then 3 for the subsequent lakh. This is getting scary. We need a cure. We need it fast. Social distancing helps prevent the spread, but it's not a cure. Right now, that's the worry I have. Yes, markets will, gyrate on a daily basis. Macros will look challenged, and markets will run up when we have days like this, when announcements and expectations run high, and then suddenly some bad news will come out. I'm told the next 8 or 10 days are very critical for India. So maybe some bad news will come out, markets will go up, markets will go down. Right now I'm making friends with my technical analysts for a change.
Okay, Dipen, good morning. So what's the technical analysis saying? Is this a rally to lighten your positions in your portfolios, or do you think you will stay put?
So we are all down something like anywhere between 30 and 50% on individual stocks, and at least 25-30% down on many portfolios right now. Okay, I think people should be willing to stay put unless they are compulsive traders. We need to get a fix on what's happening here before we take a call. You can easily get hacksawed by the market. You can be a seller at the lows, a buyer at the highs, and then again see a day of mark-to-market losses. So I think it's time to be a very disciplined trader if you must trade. Otherwise, sit back and enjoy the ride. It sounds like a terrible thing to say and unfashionable, but that's what it is.
Okay, well, it could be a very, very volatile ride, right? A big roller coaster ride right now. But just look at the Bank Nifty now up over 1,400 points. A big move on the upside. IndusInd Bank, Axis, HDFC Bank, ICICI Bank, all up about 7 to 10 odd %. Dipen, hi, morning. Talking about financials, considering that there is a package that the RBI will announce, do you reckon that the worst of the slowdown in financials is behind us, or do you think it's too soon to call that? And would you buy any of the marquee banks now?
So like I said, if you have to take a worm's eye view of the universe, being a stock market creature today, it looks like a very exciting time. But remember, we are coming off a 30-40% kind of fall. And yes, of course, you're going to see a textbook response very likely from the government and organs of the government, such as RBI. So you're going to see fiscal easing. I think some of that was announced yesterday in the 1.7 lakh crore package. You will see monetary easing. I would be stupid not to expect an interest rate cut today. And of course, regulatory easing, which is actually much, much more exciting from a stock market perspective. I think banks will be given some leeway in terms of recognizing NPAs and some forbearance there, which should immediately translate into very, very good sentiments on the banks which are the most battered and which were the most highly valued and were commanding the sexiest valuations with the highest possible growth rates. So all the shining boys of the financial world are going to be back in fashion. You can see that in even before the announcements have come out. I don't have to spell out names like Bajaj Finance or a Kotak for you, let alone my own bank, my parent bank. So that's the point is not whether it's HDFC Bank or Kotak or Bajaj Finance or some such. It's just that there is going to be a massive reflation of sentiment here. And that's what's going to happen at 10 o'clock. That's what I suspect will happen. So, I repeat, it's a great time to be a trader. As an investor, we've got battered and hit out of, consciousness. So we are beginning to look alive for a change. The long-term investors will just, take this in. It's much needed oxygen for now.
Yep. Take your point on that. There was an impish delight on Anuj's face when he asked you if you will use the rally to lighten your position. So really, that's the question again. Will you be selling off something? But more importantly, are you still going to keep a lot of powder dry cash by selling off?
Excellent question. So, if I'm suddenly overnight, if I'm morphing into from a wannabe Buffett and long-term investor, failed one, let me put the disclaimer, into a ruthless and emotionless trader today, I would take money off the table at every rise. But if I'm a long-term investor, and if I've already got a lot of money stuck in the markets, I will wait for them to come back to a certain level. It's a question of internal character and how soon you're willing to go with the tide and change character with the seasons. As some kind of message for long-term investors who have suddenly been hit by this 30-40% rocket, there are two ways to look at it. If you've already allocated into equities, just take it easy.
Yeah.
See if you want to allocate a little bit more. After all, equities is risk capital. You shouldn't be allocating 100% of your wealth here.
Absolutely.
Okay. But if you are at like 15-20%, surely yesterday was a good day, today's a good day, and if tomorrow it falls again, then it's going to be a good day. You should start averaging your way.
Okay. Well, right now, Moody's is giving some numbers out for GDP in India. They go by the calendar year, and so calendar 20, current year, they see 2.5%. My sense is Q4, some of the stalwarts who spoke on the channel, like Dr. Sen, are saying that we are going to see flat because we had 2 normal months. But March is the month where, almost 20% of the year's activity takes place. We're going to see flat because we had 2 normal months. But March is the month where, almost 20% of the year's activity takes place. And that was the lockdown month. So we may be flat for this quarter itself. GDP may come in at 0 for this quarter and could be a contraction next quarter. But for the year as a whole, all 4 quarters together, Moody's is looking at a 2.5% growth. So that will not be defined as a recession. Recession is 3 continuous quarters of contraction. We are far away from that, hopefully. Keep your fingers crossed. Well, what will you churn out of and churn into? And more specifically, will drugs, pharmaceuticals be the flag bearer as health becomes a top-of-the-line concern for all of us?
Okay, so there are too many questions in there. I'll take them one by one. One is, will I want to churn out of something? So if I'm stuck with some of the junk of this last rally, and I don't mind classifying stuff like, the Yes Banks and the DHFLs and the ADAG group companies and so on and so forth in that category. Now, these are broad takes. I'm no more an analyst. I no more head research for the institutional desk of my firm. But these are broad takes. If you've got stuck with any of the villains of the market, so to say, people who have gone through contraction and implosion, then maybe you should use the current rally and other such rallies which will come from time to time to exit. But I think otherwise you should stay put. On pharma, I think it's gone through 5 bad years or more, and maybe there is some case for coming back. But I think the world is going to be very restrictive on pricing if they find miraculous cures for the COVID-19 right now. So I'm not so sure. It's for the experts to figure out. I don't have a specific view here.
By the way, right now the market is just expanding, like Lata said, the rubber band or spring, whatever you may want to call it. It's that kind of effect for the market right now, and the beaten down names in particular. Axis, for example, up 15% now, Bandhan up 15%, IndusInd up 15%, and now what, these stocks have temporary 15% freeze. For a Bandhan, all of 42,000 shares in futures and 15% freeze. IndusInd 72,000 shares and a 15% freeze. These were unrealistic market 2 weeks back on the downside, and same is the case perhaps on the upside. But Dipen, anything else? For longest we spoke about the supply chain disruption, or whether to take benefit out of what's happening in China. Any themes that you're working out there?
So I think we will see more disruption before we see repair. Okay, and that's the time to watch out for how industries are going to move fundamentally. So industries like automobiles are terribly integrated in their global supply chains. So are chemicals. So are a whole lot of other industries such as capital goods, high-tech manufacturing. industries or service sector firms like hotels and hospitality or airlines and travel are by definition globally integrated. So we will have to see how the virus plays out before we take a call on what kind of damage they are going to face. Right now, most of the stock market crack is about anticipatory damage on their business. We'll have to see how it plays out in their business and how what the fundamental analysts tell us about how fast the recovery can come. And it's such an interconnected world that it's hazardous to make guesses right now. You can be right and you can look like a genius in retrospect, but are you making a rational guess? That's the question. I think a whole lot of people have got opinions right now, and I think that is the danger. And that surfeit and surplus of opinions is leading to wild swings on both sides of the market. I think we should dig our heels in and have the courage and the guts to admit, hey, I don't have a clue here, okay? And a lot of the experts, so-called experts, are reluctant and shy to make this candid admission. I have never claimed to be an expert, so it's easy for me to say, hey, I can't figure out.
Okay.
But the truth is that none of us can figure out right now. That's the blatant truth, which very few people are willing to admit.
No, actually, a lot of people have admitted that the virus will draw the deadline. It will not be drawn by economists. It will not be drawn by policymakers. Where does the economy trough, or where does the pain trough? We really don't know. It is going to be decided by a force other than the Homo sapiens. So we have to wait for that. Thank you very much, Dipen Sheth, for that analysis. We have to be humble about our inability to understand even financial matters. I mean, even the GFC, the global financial crisis, was not really understood when we were going